Well, it's 3 o'clock. We are going to kick this off. I'm really excited to be bringing this to you guys. Today's webinar is all about buying, renovating, repositioning, and renting. So we're going to really go through step by step with actual real life examples, and show you guys some of the strategies that we have been using to really be successful in today's market. And people have been doing this for a very long time. You probably have heard people do fix and flips. And really, the twist on this is that we are fixing and flipping, but then we're renting. So, this is pretty exciting. I have many of these projects going on right now. And it's just a great way. So I want to introduce myself and share with you guys a little bit about me. So my name is Nikki Rosenberg. I am a short-term rental expert. I started in the industry when I was 17 years old back in 2005. Airbnb did not exist. We had direct booking and we had VRBO. I grew up in St. Augustine, Florida, a tourist town, and just kind of fell into the business because that was the jobs that were available. And later on, I got my real estate license and I joined the Savvy STR real estate team. I live, sleep, eat, and breathe short-term rentals. I also own a management company called Stela, and we manage properties all in the southeast of the United States in the Gatlinburg, Sevierville, Smoky Mountains, Northeast Florida, and Southwest Florida, 30A, Tampa, that whole area. You guys can find me on social media. I'm very active on social media. My Instagram is Invest with Nikki. I am Nicole Rosenberg on Facebook. And yeah, very excited to present to you guys. So, this is my short-term rental agents across the country. These are our savvy short-term rental team. Wherever you are looking to buy a property in the country, we have top short-term rental agents in those markets that can help you find a deal and have the connections there. Everyone on our team personally invest in short-term rentals and own short-term rentals. A lot of them co-host and manage as well, and but some, just have partners in that realm. But they are all short-term rental specific realtors. Everyone on the team, that's pretty much all the business that they do is short-term rentals. Lou said she's not able to see anything. Hold on one second. So Lou, you can see my screen?
Yeah, I cannot see your screen, sorry.
Okay, whoops. I'm sorry. So Son, you could see it though?
My apologies. I think I misunderstood your question when you said, "Can I could see you?" I thought you
Oh
meant
gosh, I thought that.
I thought you meant like your background screen. Like, yeah, I can see you. I apologize.
Okay. All right, no worries. I am so sorry, guys. I thought that we were confirmed that everybody could see my screen. That is okay. Well, I'm glad we
Nope.
talked now before we got into it. So give me just a second and we will get that back up and rolling. Thank you guys for your patience. I'm assuming everybody can see it now, right? Yes?
Yes, I can see it now. Yep.
Yay! Okay, good. All right, so that's me. You guys, like I said, find me online. I'd love to connect. Very active on social media, and this is my team. Just got to show them off really quick before we move on. So, our team is growing. We do have another person joining. It's that little white box there. So, our team's always growing, and it's definitely the top short-term rental agents across the country. So, let's get into it. So today we are going to be talking about how to identify the right property. We're going to be talking about value add deals. Okay, so that's just a term that we use that essentially is like I'm buying a property and I'm going to force equity, I'm going to force value by doing some type of renovations, additions, cosmetic work, some type of work to make that property a higher value than when I bought it. Okay. We're going to renovate with your returns in mind, your return on investment, and your short-term rental revenue in mind. Because, like I said, we're not just fixing and flipping, we're actually holding these properties after we reposition, and then we're doing short-term rentals with them. Okay. So we want to really talk about as well repositioning for maximum impact. I have special guest speaker Sean Bailey on. He is a lender that specializes in these types of loans. And he can really talk to you guys about the different options to reposition. Okay. And then we're going to talk about renting for steady returns, and we're going to look at a real life deal scenario, and I'm going to open it up for some Q&A, okay? So this type of strategy is really cool, especially if you're looking to find unique properties that stand out, that you want to make a top short-term rental property, because you can really customize these properties by doing these value adds to make them perfect for short-term rental. Okay, instead of just buying something that maybe was built as a primary home and not really for a short-term rental in mind, doing the value add is great because you're able to make a profit, but also customize it for short-term rentals. So why would you want to do a value add deal? Number one, potentially acquire a property that you may not have had the capital to buy turnkey. I'm doing a few different projects right now, and all of the investors would not have been able to purchase that property if it was fully the way they wanted it and completely turnkey because the amount that it would cost, right? So that's a great way to get into a deal like that. Also, people love being able to cash out with the reposition and move on to the next project. Okay, so this is a great way by doing like a cash out refi to be able to get your cash back out plus of the deal and then move on to the next project. Okay, and like I said just a minute ago, we can customize that property for the max renovated value and rental revenue. Okay. There's a few other reasons some people just like doing those projects. Like they like the beauty of the before and after. And yeah, so really identifying what to look for. So we're going to go through some high level steps here, and then I'm going to go into an actual like live project that I have going on. So number one, we're looking for distressed and undervalued properties in desirable areas. So I'm on the northeast coast of Florida. My markets are Amelia Island, Jax Beach, St. Augustine, Ponte Vedra, Flagler Beach, Daytona, Orlando, those areas. It has a lot of aged inventory. It's got a lot of properties that are old, especially on the beach. So those areas are great because there's a high demand for not only people living in those areas, but also for people vacationing to those areas. And the regulations are great. Okay, so there's lots of opportunity for very favorable short-term rental regulations in my areas to find those properties. So, and you also have in my specific market, people that have owned for 20, 30, 40 years, and now they're aging out, and those properties are being passed on, they're being turned over. Okay. Um, and you really want a property or a market that we have that data to support the short-term rental demand. Okay. So we want a property that has high demand for short-term rentals if you're using the specific strategy. Now, if you're really just doing fix and flips, we're not really talking about just fix and flips today. I'm really coming to you guys with the strategy of turning these value add homes into short-term rentals. Okay. And then properties with layout potential and nice size lots. If they've got the ability to convert spaces into additional bedrooms, the ability to maybe do a garage conversion, the ability to add on. I'm doing a project right now where we're actually building an ADU and we're building up from the garage. We're building two levels over the garage and then a rooftop deck. So having the ability to add on to that property and then having a nice size lot gives you a lot of opportunity to stack amenities and to really make the house, maximum occupancy, maximum amenities offered, like game rooms and movie theaters and things like that. So I really look for high square footage homes with the biggest lots possible in the best possible areas. That's what I'm looking for. Number two, we're going to renovate with intention. So that before you even go under contract on that property, you really need to have a plan on what is going to be the guest experience when they stay in this property and what amenities can I add to this property? A pool, a jacuzzi, an awesome deck, a rooftop deck. I'm doing another project. We're actually decking out the whole rooftop deck, and it's going to be the ability to have weddings and events up there. There's going to be a bar, an outdoor kitchen, a putt-putt course on the roof. We're going to have all these cool things on that roof, and the guests are going to absolutely love it. There's nothing like that in the area, right? So how can we create a guest experience like none other, add amenities that your competition doesn't have, and then also think about durability because we know that guests are hard on short-term rentals. They get a lot of wear and tear, especially when you have bigger properties that are sleeping, anywhere from 12 to 30 people, they're going to get more wear and tear. So you really want them to be durable finishes. Also thinking of like wow factor in photos. What is going to draw that person to be like, oh my gosh, I have to stay here. This place looks incredible. That wow factor in photos is key. So always think about a property of like, what's my hero shot going to be? That first picture that people see, it needs to be scroll stopping and it needs to be like, wow, it needs to pop off the page, right? So I'm thinking about that hero shot before I even go under contract on a property. I want to prioritize those high return on investment upgrades. So again, you're thinking about this from twofold. What's gonna get me the highest after renovation value? Okay, so what is gonna make that appraisal come in higher, the value of the property be higher? So think kitchens, bathrooms, curb appeals, pools, things like that. And then also what's gonna be, the upgrades that I'm gonna add for that short-term rental guest, like we just talked about. Okay, so it's really that intention. You have to think about both when you're trying to do these types of deals. So number three, after you've bought, you've renovated, now you're going to reposition, okay? And again, we're going to dive into this a little bit deeper, but I'm giving you guys high level right now. So really, there's a lot of different ways that you can reposition. You can do a cash out refi where you're essentially, now taking like 80% loan to value, 75 to 80% loan to value at the new appraised value, and you're pulling out your cash plus maybe some profit, okay, depending on where your numbers land. And it's really up to you how much you want to pull out. By the way, that's also tax free because it's debt. Okay, so now a lot of people love the cash out refi because they're getting debt free or tax free cash that they can go do something with. Number two, that rate and term refinance. So maybe you bought right now, like when rates are higher, and then a year from now our rates are come down, and you're just refinancing because you're having a, let's say, 1% less interest rate or better terms. Okay. And then home equity loan or HELOC, that's another great way to tap into the equity in that property. So you're going to reposition it because a lot of times when you're buying these properties, you're getting a lender who I actually have on to talk to you guys about this in just a few that is giving you money to buy that property and then finance all the renovations, and it's at a higher interest rate. So you're going to want to, as soon as you've got that project done and it's going to have a higher ARV, you want to get out of that higher interest debt by repositioning. Okay, so that's really why we want to take that strategy with reposition. So really just profitable renting. Once we've done all that, we've bought it, we've renovated, we got our reposition done. You can do all this simultaneously, right? You can start renting before you refi if you want, if you're ready. I suggest doing that as soon as possible, getting it live, getting it cash flowing. But really to be profitable in renting, there's a lot of moving parts to this. And I'm curious, drop in the chat if you are a first-time short-term rental investor, and if you're not, how many short-term rentals do you already have? Because I'd love to just know kind of where our audience is at. But number one, design and set up to be a top 1% short-term rental. I think if you're going to do this business, you're going to do it right. You need to be a top performing property, or else you're just going to fall with the other mediocre places. You want to be able to set yourself apart from your competition and be performing at a high level. So that design and setup has got to be top tier. And you need to think about that through the whole entire process. And I really like to stay at the property to really understand how that home lives, because how a home lives versus just how it looks, very different things. And you want to make sure that it lives well for the guest experience. Okay. Number two, revenue management tools. So, using some dynamic pricing tools. Revenue management can be very complex, and this is where most of the money is made in the business, is by managing your revenue really well. For us, we manage 100 properties, and revenue management, we actually have a full-time revenue manager that does this daily. It is very complex. a lot of data. I'm not a data analyst at that level of revenue management. That's why I hired people that are very good at that. High level, I get it, I understand it, but it's not my forte. But the revenue management, there's a lot of courses out there. If you love data and you love really diving into that, revenue management, would probably be a breeze for you. But revenue management tools like Price Labs, those types of tools, softwares are going to help make it easier for you. But it is still a lot of data to work through. And then number three, streamline systems for cleaning, communication, maintenance. There's a lot of tools that can give you automations in the business. For example, we use Breezeway for all of our cleaning tickets and our maintenance tickets, being able to do safety inspections, preventative maintenance. We're really streamlining that, and all of that is done. It's all documented. I'm able to go back and look at the entire history of maintenance on a property, the entire history of cleaning, timestamp photos, communication streamlined through there. And yeah, it's great. So this is really, is automations required for profitable renting? No, but it definitely gives you more time back and it makes sure that, things aren't missed. In our business, all the different moving parts, the little balls get dropped. And so those systems really help you to keep it all organized. So just some mistakes to avoid. Really not defining a specific scope and timeline. This is something that could really mess up your budget and really mess up your carry costs because if you don't really have that dialed in and defined of what you're actually doing to the property, what it's going to cost, and a timeline, and it could really be detrimental to your whole deal. You could lose money. I actually had some clients who overpaid and then they were delayed on their timeline. They lost a whole team. They had to get a new team. And then when they went to go sell, by the time they were done, the market had changed. So this is really important, to define all that and to have a good team in place lined up with a timeline in writing, signed, sealed, delivered so that you can really execute. Okay. Ignoring market data and due diligence before buying, this is really a big part of it. You've got to understand your data. What do the comps show? What do the other rentals show? The rental comps show. What is all the due diligence you need to do for the contracting part? That all really needs to be dialed in as well. The next thing is like hiring the wrong team. If you don't have the right people that don't have the experience, you could get burned. There's a lot of bad contractors. Just like any industry, you're gonna have good ones and then bad ones, right? And not having the right team, and even having the right team, it can still be really challenging. You've got to advocate, you've got to follow up, you've got to be on it, because people are people, and we've got to make sure that we advocate for the things that we need to get done. Managing without automation tools. Again, it's an antiquated way of doing things. It's really important that you make sure that, again, things are organized and balls are not dropped. Otherwise, it's going to really impact your bottom line. All right, so let's look at a actual case study. So a lot of times I am a deal finder. I go out and I also do my own deals. I go out and I look for what's going to be an ideal deal. Where's their meat on the bone, right? Where are the numbers going to work well? And then I bring those to my VIP clients. And so for this property, I had actually already toured this property with a contractor, already had a vision, already had a loose plan, and knew that the value was there. Okay, so then we go into analyzing the numbers, underwriting. I'm doing all of that ahead of time. I'm underwriting the short-term rental side. I'm underwriting the fix and flip side. I am running all those numbers and double checking them to make sure that it's a good deal. Okay. And then I'm also kind of defining that initial scope of work. Like, okay, we could add a bedroom here. We could add a pool there. We could do a game room here. I'm really kind of that visionary to help my clients see the potential because sometimes they can't see that potential, of helping them know like where we could go with that property. This one does need a full renovation. There's every window's leaking. There's mold. There's a lot of things going on with this property. Being its ocean front, it's been beat up. So it does need a full renovation. It is a big project, but the money is there, right? The numbers are there. adding a few bedrooms, extending the deck, adding a pool. We might do something slightly different than what I originally visualized with this, but we're not quite actually done finalizing everything with this property. So, but we're close. We're getting there. So this is originally a 5 bedroom, 4 bath, over 3,600 square feet on almost a third of an acre on the ocean front. It was built in 1975. It's an old house, right? And it's definitely going to be a fun project. So here's kind of the numbers for you guys. So purchase price was, let me just move that. Why does it do that? Sorry about this. My computer. Give me just a second. I don't know why it does that whenever I click, but okay, I bet. I've been so used to Google Meet. I haven't been on Zoom in a while. All right, so we were able to purchase this for 1.325. They originally had it listed at like 1.7. Something that we also do, some creative terms. So the person that ended up buying this wanted to have a lower purchase price, but we had actually pre-negotiated about $250,000 in seller credits on this deal, which would have been great for someone who needed that cash. Okay, so essentially how that works is I think we had it originally negotiated at 1.4. So we would have bought it at 1.65 and then had the $250,000 in seller credits to fund a lot of the part of the renovations, not a lot, but it would fund a part of those renovations. Okay. Now we ended up not doing that deal, but I had pre-negotiated that with this seller. So the investment analysis, really looking at these two comps, and then we also looked at others, but just a couple comps. This one sold for 2.85, approximately 100 square feet. This one sold for 3.6. It was a newer build with a slightly larger lot. And then estimated renovation cost on this is about 600,000. Our ARV, we're projecting somewhere between 3 and 3.4. I went here kind of in the middle at 3.2. So total investment is 1325 in the purchase, 600 in renovation. We're looking at about, almost 2 million all in. Gross profit 1.275, less selling costs if you were to sell this property, but it's less if you refinance it and hold it. So net profit, you're looking at just under a million on this property. Okay. Now, this is just an example for you guys of how the numbers could work. This is a lot of, these are big numbers, right? So I don't want that to scare you because you can do this on small deals. You can maybe start with making 100,000 on a property. You just really want to make sure that you're analyzing these numbers and you have people helping you with that analyzing if you're not, if you're not experienced yet. So I just took some vision for the reservations. We actually don't have a full scope yet on this, but just beautiful, bright, beachy. We come up with this together. Okay, this isn't the final, but this is just kind of like, hey, let's come up with a vision for how we're going to renovate this property. What's it going to look like, right? So that's something that our team, we have designers in our back pocket as well that can, define the scope of work when it comes to the design and the setup for the furnishings and decor for the short-term rental. I just want to show you guys kind of what we do from an underwriting standpoint, how we do this. So you actually get, whenever you're working together with savvy agents, you get a custom pro forma on any property that you're serious about buying. Okay. So we go through this together. We'll walk through the numbers together. And really this one, so at a very low level, we're looking at cash flowing about 100K a year on this property. Okay. So if you look here at net cash flow, and then depending on if you're taking depreciation on the property or not, you're looking at total benefits over here. So this is a really great property as far as not only the profit that you can earn, from the renovations and doing a reposition, but also, this is a 20% cash on cash return. So it's a really great, lots of meat on the bone. I do have a couple deals similar to this still available if you have someone or yourself are looking for a project like this. Now it's a project, so be ready, but definitely have some that are similar to this. as far as meat on the bone, we call it. So we also review inspections together. So this one came back with a lot of things. We actually discovered later on, we didn't know that the all the hardy board was installed wrong. Like all the walls were wet. You know, there was a lot of things here that we weren't really expecting, and we had to go ask for more money. And we got most of that money. We asked for 100, we got 75 of it. But we review all these things together and make sure that, you know, the deal is still viable and that we get you the best deal possible. And then scope of work, budget, you know, this is just a simple example of what someone would put together, you know, to be able to define, here's how much this is going to cost, okay? And here's all the line items, things of everything that we're going to do and our estimated cost. So this is something that you definitely will have to do, especially when you're using a lender that is going to fund the renovations. You're going to need to have that scope of work dialed in. They are going to want that, okay, before they give you the money. So that's again something that your contractor and you can come up with, and your realtor and your team should be able to get you to the right people to help you do this kind of work. All right, so that really wraps up my section. I'm gonna pass it over to Sean Bailey. He is really an investor specific lending specialist with Invest with Sean LLC. Sean, I'm excited to hear from you. Take it away.
Yeah, thanks, Nikki. No, that was awesome. I mean, everything that you just spoke on there, grand scheme of thing, I think everybody in this group has probably heard of the Burr method, exactly what you're referring to. The buy, renovate, rent, refinance, repeat system. Today in this kind of presentation, I'm just going to really focus on, yep, there's our Burr method. I focus on the lending side of things for all my investors. Obviously, for the buy side, the B in Burr is where there's lending and financing, and then the reposition. You know, the rent and the reposition, the rent and refinance, those are kind of interchangeable. You could refinance before you start renting. You could rent before you refinance. The idea is that you get it rented out and you refinance at any point. But yep, Burr method buy. That's the stage where Nikki was referring. Buy properties that are distressed, find creative financing, do seller sub two deals. There's a bunch of different ways to acquire properties to do what you guys are looking to do. That's where hard money and fix and flip loans come in. Obviously, in the fix and flip loans, that's where we get you your renovation financing. So the B section of Burr is buy, and that's why I'm going to really focus on the fix and flip side. There are five major factors to consider when buying with hard money. One, does the project make sense? So anybody really is qualifiable for a hard money or fix and flip loan. Doesn't matter who you are, if you have no experience, if you got all the experience. At the end of the day, it's a strictly asset-based loan. Does the deal make sense? Under the specific case study that we're looking at here in Ponte Vedra, that I'm actually the lender on as well, obviously, Nikki reviewed those numbers. The numbers make sense. There's a percentage called the ARV, which is your after repaired value. Hard money lenders will typically go up to a 75% limitation on how much money they will give you for the rehab budget. So in this specific scenario, on that Ponte Vedra home that we were looking at earlier, the terms are 20% down of the purchase price. We did have options at 15% down, but based on what we wanted to be with terms and so on and so forth, we went with 20% down. And then all $600,000 of the renovation budget are capable of being financed through the hard money lender as well. So utilizing these hard money projects, our hard money loans, allows you to keep more money in your project or more money in your pocket to do these types of things. So project underwriting, the deal has to make sense. Number two, one to consider is terms get better with your experience. The more projects you've done, which I see people in the chat have done 2, 3, 4 projects, or even first-time investors, this individual's in a everything considered would be considered a first-time investor for fixing and flipping using hard money. It's their first time using hard money. The more experience you have, the better terms can be. A third factor is credit. Typically, even though it's an asset-based loan, they want to see that you're a good borrower in general. I have lenders and hard money that they don't even care about your credit score, but 9 out of 10 times you're going to get better terms and higher approval rates if you have good credit. Number four thing to consider is your property type. Getting hard money is not difficult for single family homes, for duplexes, for normal homes. I have a lot of people, especially in the short-term rental world. I'm a preferred lender with Rob Built from the Bigger Pockets community as well, and they come to me with, "Hey, Sean, I got 20 shipping containers that I want to throw up in trees, and I want to make a 20 unit tree house in the middle of Texas, and I'm going to build an Oasis pool. Can I get funding?" It's like, no, hard money's not going to really touch anything to do with geodomes are tough. A-frames in rural areas are very tough. Oasis projects. Somebody came to me and they wanted to build an underground hotel, like underwater. Those things are most likely going to be denied. They want to see your picture perfect oceanfront properties or your single family homes, even duplexes up to quadplexes, and they'll give you the percentage of your down payment or percentage of your purchase and 100% of your rehab financing. And last but not least, on approval, things to consider is liquidity. They want to make sure that you've got enough money in the bank, not only to access the project itself, but for contingency purposes. Like Nikki said, you want to make sure that you have a dialed in timeline, that if you're only considering your project the last 6 months, if there's an oopsie on permits or whatever, can you make it to 9 months? Do you have those monthly payments on interest to get you to 9, 10, 12 months if your house is sitting on market and can't be sold? They want to see that there's sometimes a 25% buffer on renovation costs, where if you do take it to the studs and you realize termites are eating it all apart and it's a tear down kind of thing, do you have enough money to get back on your feet if the project does come across a speed bump? So those are five main factors when considering approvals for hard money. Project underwriting, does it make sense? Do you have any experience? What's your credit look like? What type of property are you working on? And then how much money do you have in the bank for it? What do terms typically look like in hard money? 9 out of 10 of my loans typically look at 10% down, 100% of the rehab financing. Loans, the interest rates kind of vary dependent on credit score and interest and your down payment. So anywhere from 10 to 12% interest only. They will always, always be interest only. Some people are new investors look at me and say, 10%, 12%? Are you kidding me? Like, there's no way. Yep, that is the going cost for the dollar on hard money. The more money you put down, if you're looking for, like I said, in this specific scenario case study that we're looking at, we had a 15% down option, but interest rate was higher. If you want to put more money down, that's less risk for the lender. So they'll give you lower interest rates. So sometimes if you've got 20% down, even 30% down, if you want to, you can get really, really good terms on that interest rate. And usually those are all 12-month loans, and costs kind of vary from 1% to 3% in points from lender fees. Once again, that's going to be heavily dependent on your experience as an investor. The more experience you have, the lighter the fees typically show up. And at the very bottom, I do want to make this point. It's very important to note that your terms can drastically change at any point, depending on property, depending on the five first factors that we spoke about. I did 3 hard money loans this month. One of them was 100% financing through 100% purchase price and 100% rehab. But it was 12.5% interest and 3 points. I've had another loan that was 20% down. That was 9.95% interest and cost 2 points. So rates and terms and everything can fluctuate based on your financial goals. So I always try and find out what's most important to you when drawing up and structuring a loan. The key takeaways here, I think we've touched on all of them, but just to summarize everything, uh, when people call me and ask for hard money or for terms, they don't even want to know anything about me. They just say, "Hey, what are your terms? What does it cost? What's it look like? And how do I do it?" At the end of the day, your best terms are going to come for how leveraged you are. The stronger the project is, meaning if you have a lot of room in your ARV, meaning if you're below 75%, let's say you're at 70% ARV of total money loaned to you, meaning that there's a bunch of sweat equity in the property, then you're going to get better terms. The more money down that you put on those properties, the less leverage, the better terms you're going to get. And obviously, the more experience you have over the years, the better terms you will find. Um, Worst terms are for the people that are looking for 100% financing. Yes, I do have those options. No, I do not sell those options. If that makes sense, I'm not a salesman for 100% rehab and purchase financing, even though that is the number one Googled thing when it comes to hard money. How can I get leveraged 100%, no money out of my pocket, and do this project? Yes, there are options, especially if you have cross collateralization. If you have free and clear properties, that's the best way, and really the only way I like to sell those scenarios is if you've got free and clear property. Yes, we can cross collateralize, and then we can do the whole project, and then you can refinance out, and then they will release the lien on your free and clear property. So those are good options. But with that being said, when you're 100% financed, your profit margins shrink because you have higher points on a higher total loan amount, and you've got higher interest rates, and it's a higher risk to the lender. So um, at the end of the day, anybody can get hard money, even with zero experience. You can get access to 10% down, 100% rehab financing. It just depends on every scenario. So I tell people before you go under contract, before you start doing your underwriting, give me a call. I will help underwrite every deal for you on the lending side. And that also includes the reposition side of things. So I help all my lenders get out of these hard money loans. As soon as they're done, we refinance into their long-term leverage for a 30-year fixed rate loan. Or if they bought everything cash, we take out a HELOC or whatever it may be. So we discuss all those options as well. Scott, yeah, I also do DSCR. A big one right now that I'm doing outside of DSCR for the long term is bank statement loans. Bank statement loan, we don't have to worry about the debt service coverage ratio side of things so a DSCR loan, I'll just touch on this. Thanks, Scott. Um, a DSCR loan is the third or fourth part of the Burr method, which you're trying to reposition. You've got your cash out refi, where we want to take out the money that you have built into your new appraised value. Um, DSCR stands for debt service coverage ratio, which means as long as the property rents for as much or more than what the mortgage payment is, you're automatically approved. So there's no income documents, there's no W-2s, there's no tax returns. It's, hey, how much money does the property make per month? Here's the mortgage payment. If we're 1-to-1, you get approved. Now, there are other options that we can go dive into a little bit deeper where there's negative cash flow loans and things of that nature. Once again, I don't suggest. But bank statement loans seem to be the hot take right now as far as where interest rate goes and higher loan amount approval rates. It's really hard. I have an Airbnb myself. My mortgage is $500,000. It was hard for me to prove that I could make $4,500 a month to cover my mortgage payment. Mainly because it's $1,000 a month in property taxes, which is an important factor when you're doing your underwriting as well for your costs. That at $4,500 a month, the house would rent for $3,300 on market rent. So the only way I can get approved for this loan, because I'm also self-employed, like probably most of us are, and we like to hide things in our tax returns, where it's a lot easier. We're not paying Uncle Sam all our money. Bank statement loans, we just take all of the money that comes into the last 12 months of your bank account. For instance, I had one investor, he had a business that he owns a trucking company. He brings in about $100,000 a month in trucking company business. And then what exits is about 80,000. So he net profits somewhere around 20 grand a month. How the bank statement loan works is all we care about is the $100,000 that comes in. And then based on an expense report, at max, we use a 50% expense ratio. So we qualified him on $50,000 a month worth of income. And we were easily able to qualify up against his debt to income ratio, well above or well below 50% DTI. So this drastically helps a lot of self-employed individuals, like most of us are, that show heavy cash flow in the account. Even if we have heavy expenses, we don't have to count those expenses towards your income. I know it sounds kind of like crazy, but lenders will allow up to a 50% expense ratio after all income is taken in. So those are great income qualifying investment loans that can be vested under the LLC to protect your personal assets and all of that, and have very competitive interest rates. Some would say even better than DSCR loans. So the reposition side of things, I mean, I could talk for hours on that side, and I don't want to take up that much time. But if you do want to reach out and ask some follow-up questions on DSCR loans or bank statement loans or even second home loans in a sense, because those can be considered vacation homes, feel free to reach back out.
Wow, thank you, Sean. That was awesome.
Of course.
Thank you, thank you, thank you. So we'll open it up for some Q&A. Let me just, you guys are welcome to take yourself off mute or ask a question, or you can ask in the chat. How do we work with both of you? Oh, very good question, Bridget. All right, so let me just go back and so Sean, we didn't put your contact. Can you drop your contact on the chat, please?
Yeah, sorry, that was a
Sean will
rookie
drop
mistake.
his contact, and I will as well. There you go. There's mine. You guys can book a meeting with me. I keep my calendar up to date. And there's my phone number. Feel free to text. Texting is best first for me. Let me know who you are, and I'll save you in, share your contact card. Would love to. Trevor had a good question. So could you describe the best way to manage a remote renovation project? Absolutely. It is extremely difficult if you don't have good boots on the ground. And I would say if you're remote and you don't have a team in that area, you really need to have someone that's project managing. You want that trusted person that can go do property checks. I mean, I am always checking my properties for my people. Like right now, I've got one on St. Augustine Beach, the one I told you about that had the cool like rooftop plan. And I'm there checking, like, hey, how's it going? Popping in, like seeing their progress, seeing what's going on, sending videos, sending photos. Like they need to know that, hey, you're gonna be held accountable, right? And I'm always positive. I'll even bring the workers like Gatorades and things like that. Like just trying to be a light, but also like, hey, we're not forgetting about this. We're here. You want that everyone does more when someone's watching, right? We're human beings. That's why professional, athletes have coaches. Like everyone does more when someone's checking in. We all need accountability. So you really need that boots on the ground, someone that you absolutely trust, right? Someone that's going to tell you the hard things, not just what you want to hear. I will tell my clients absolutely if I think something is up, or like I've even told my clients to cancel deals before, and I would give up, those commissions, but I don't want them to go into something that's not going to make sense for them. But not everyone operates that way. You really need to have someone that that's going to give you the good, the bad, and the ugly. Because I'll tell you, doing these projects, stuff can come up, right? And you can usually find a solution, but sometimes there's not. So you just need to have that person that has all the people. Like I was raised in my market. I literally know almost every single person who to work with, who not to work with. And do I not know everyone? No, I don't know everyone, but I know the people I need to know to get my clients the results that they want, right? So you need that person. Um, you want to invest in the SoCal area because I live here. Is this a good market? And do you have short-term rentals in this area who can help me find a good deal? So I am in Northeast Florida. I have actually never been to SoCal. Would love to go, but we do have Abidjit in that area. Lou, could you maybe drop the market minder or Abidjit's we call him Ab, his calendar link for California, please? You guys can go to savvy.realty too and just click to find do the market match. And Scott and Dylan will go through with you guys, talk about like how much cash you have, what type of property do you want, and then they'll actually match you and give you options like, oh, you want Florida by a beach? Talk to Nikki. Oh, you want California? Talk to Ab, and then you can talk to those agents and see if they're a good fit for you. Yeah, so there's Ab's link. He does California, and then the market matches if you just want to get matched to someone. All right, any other questions? Cool. All right. Well, you guys have my number. You have Sean's number. You guys, oh, I forgot. I have this in here. You can scan the QR code to book a call too. And there's my number. And yeah, just very appreciative of you all being here. Thank you for your time. There will be a recording and definitely, share that out if you have people that are interested. And we're looking forward to serving you guys. Have a beautiful rest of the day.